Hello and welcome to Pro Trader Strategies Market Commentary for Monday, March the 25th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind, everything I'm talking about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we are here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. It being a Monday, not a whole lot going on. We do have a FOMC member, Evans, speaking a little bit. Actually, it was overnight. So at midnight, it must have been overseas. And then that's about it for the overall economic data. We do have some good stuff coming out later on this week. And we have Evans speaking again tomorrow early morning as well. All right. Crude oil unchanged for the most part. Looking like we were going to go in and stay in that 60 handle. But then Friday, we started getting a lot of pullback with the overall equities really seeing some weakness, making it, some of the rhetoric and economic data we were getting out, it was really starting to look like we are seeing some slowdown across the pond, which would then ultimately affect us here in the United States. So that was a pretty big wet blanket thrown onto the overall markets, almost making it look like we were looking to turn into a bit of a bear market in a way, or a bear market in the equities. But let's move on. We got crude oil just slightly lower right now. Everybody's focused on the equities, I believe. Gold moving higher today by $10, quite a bit. Now that we're back into that 13 handle, we could easily see gold holding on to that. We've talked about this Friday with some of this this worry that there's a bit of a global slowdown. That's usually when people start throwing their money towards gold futures. And I think that might be a product of what we're seeing, especially today. And now that we've gotten into that 13 handle, anybody that was short fading that is on their heels right now and is really scrambling to cover. So they are up against this 78 Fibonacci. That gets broken. We are surely off to at least test the 1350 area lockstep for the most part. I think we'll easily go up there and test that if we break through that 78 Fibonacci, which I think may very well happen today. All right, bonds moving higher as well. Really a product of the fact that probably even Evans and the rest of these Fed governors are now becoming very dovish, meaning they are worried about the economy slowing down and not so concerned about inflation. So that's going to push the markets like that with the bonds moving higher and equities, let's say, moving higher. All right, we've got the VIX pushing a little bit higher into that 16 handle after Friday's really massive spike in volatility. That was pretty good. It didn't really affect a ton of individual underlyings like we would expect, but it did help with some of the volatility there in and around that. Now let's look at the Dow Jones Industrial Average, up about 36 points, as you can see here, and it went down and tested the point of control as we would expect. Market was down over 200 points off the open. Now we're starting to recover. I think equities, our E-mini S&Ps are near the highs of the day. But making it look like a nice little bottom here after testing the value area high, coming back down to the point of control. That finding support around that 50-day moving average and the point of control, which is lining up. We could see this move a little bit higher, but I've talked about this. I think these little parts of the low volume nodes are going to get filled in here before we start really moving in any discernible direction. All right, NASDAQ is in negative territory by 19, but well off the lows of the day. You can see Friday we accelerated engulfing patterns, pretty bearish. But if we get this little doji here today, it's going to look like a lot of support, and we'll have to really depend on tomorrow's candle to get a discernible direction if we finished right here where we are right now. Obviously, a close near the low is not going to look the same. And similarly with the E-mini S&Ps, they were down big on this morning and only down a couple of points right now that can easily be made up. Again, an engulfing pattern, which is very bearish, but today we're finding a little bit of support. I'm still leaning towards the bearish side of this. I think the risk is to the downside right now, which is why, if you remember, I put on those SPY puts. I was going to cover them, but the way that the market started working out Friday and today, I'm going to hold on to them a little bit longer because I need some of that protection. As you guys know, I have gotten overly long in my portfolio for a bearish move. So that's why I added those SPY puts as a delta adjustment. To be quite honest, I don't really care if I make a ton of money on those because I'm obviously bullish to the upside. Those are more of a protection. That's my hedge. Okay. All right. So let's talk about the E-mini S&Ps. Overnight inventory, as you can see, got really short. They tried to flush themselves out coming into the day session, but we all looked at the economic data and everything else, and you can see the market really slammed down to the lows right on the open. We have since recovered, shaking out some of those weaker hands and printed new highs. But again, there's a lot of bearishness in this market. It's hard to shake right now. So even though we got that massive rally, there was just it was a lack of liquidity on the upside. It feels like it was more of a vacuum rally to me, and now we're starting to see some of that selling pressure come back in. So today's close is going to be very important. If we close obviously near the highs of the day, that's going to look very bullish for the next couple of days. Close near the lows, I would be very weary for sure. And then let's talk about a couple of trades that I've done. EA Sports, remember I talked about doing this trade on Friday. Remember I was looking to put this trade on with EA Sports on Friday. Let me find out exactly what my strikes were on that, or the price was exactly. But on Friday, excuse me, on Friday I did the butterfly in there, the iron butterfly in there, and we started out with the straddle, right? We're selling the 102 straddle and then defining that risk. I defined that risk by going out and buying the 115 calls and the 89 call or puts in there. So the puts on the downside, basically, if we're looking at the 89 102 put spread and then the 102 115 call spread jammed together, gives me that iron butterfly, right? And I got a collection of $7.28 for that trade. That was the trade that I was working throughout the day trying to get that one off. Finally got filled basically close to the end of the day. And then Disney's a trade that I've added today for a new trade. Looking for the upside. Looks like we've found a bottom here. It was looking like a bit of a confirmation. When the broader markets were down, Disney was up, and I was looking at that as the flight to safety kind of trade. If the markets were going to start selling off, some of these other ones might hold a little weight. This is actually starting to set up as a continuation pattern, so not looking as rosy as it did this morning, because this morning it was looking pretty darn good. So let's go talk about that one. I went into the Disney trade with the April. I sold the April 100 puts in there for 67 cents. So as you can see here, if we look down, these are where the 100s are with the collection of that credit. My break even's 99.50, so I'm below that 100 handle, which will act as a huge support level, despite if there's a Fibonacci or anything else there. That will act as support. It's a psychological level. When Disney would get down to 100, people are going to have to be thinking that's value. So with the credit and everything else involved, I'm able to get below those 100, the 100 handle, which is below this right here, which should act as support and that psychological level of the 100. So I'm pretty happy with that strike location for Disney. And like I said, I put that on this morning. And then SPY was something I'm looking to maybe get out of if it finishes closer to the highs of the day. I'm actually really leaning towards holding on to this. To be quite honest, I think that this market is going to see some weakness into the close, so I'm going to hold on to it. But having said that, if I can get out for, a double, I'm going to be looking to do that. And with these, I have on the April 279 puts I bought. Remember, this is a very short-term trade. If it doesn't start working out in a couple of days, I'm looking to cover that. Remember, that had to do with that whole theta decay component. And I paid $2.46. If I can get out for about $5, I'm looking to get out. So I was very close to that this morning on the lows, but since started rallying and not allowing me to get out for that double. All right, that's it. That's all I got for you guys today. Those three trades are the ones that I'm looking to trade around today. As long as I get the marbles out of my mouth, I should be good. And Boeing is something that I'm looking to be very close to covering as well. That's it. All right. So check it out, protraderstrategies.com. You can find all my webinars just like we did this EA Sports on the Iron Butterfly. I went through all of those rules. How to set up, how did I come up with the wings on that Iron Butterfly? Remember, we started out with the 102 straddle with that one, with the EA Sports, define that risk. How did I go and find that strike location on those 89 puts and the 115 calls? Why did I come up with those? What made me pick that strike location? All that stuff I talk about in the daily market commentaries, in that webinar for the Iron Butterfly, and or all the rules that I go through with all of my webinars and or my strategies. So check that out, because there is a rule as to why you pick those defined risk areas for this specific strategy. And I talk about that in those webinars. You're not going to be able to find it anywhere else. Yes, people will tell you how to do the Iron Butterfly. You start out with a straddle and then you define the risk. Well, where do you define that risk? Okay, you'll find out if you go to protraderstrategies.com and check out that video. All right. That's all I got. Other than, if you can't take that, take it easy.